Hello there. This is James, and you're watching OneRoyal, and it's live. In today's program, I want to talk a little bit about how, in some ways, Powell's press conference last night has given the market a little bit of a hug, a much needed hug. Plus, I want to talk about a certain somebody in the White House. You might have heard of it. It's a big White House in Washington. Certain somebody in the White House isn't too happy about the decision the Fed made last night and the ongoing little bits and pieces with that. But before we get into all of that, don't forget these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, there are the risks at hand before entering any trade. With that out of the way, let's get started. So, like I say, yesterday, it gave the market a little bit of a boost, and I'll tell you why. But the effect is not massive. It's more of like a heartwarming mug of cocoa in some ways for the market. But as we know, yesterday, the Fed, as we anticipated, as we expected, the Fed kept interest rates steady. They didn't change. They didn't cut interest rates. We sort of gathered that. We knew that was most likely going to happen. And they did indeed keep to their prediction using their little dot chart they use of doing 2 potential rate cuts in 2025. So nothing new there. Nothing new. However, they did change a few things. Okay. They changed their future forecasts for the US economy. Now, they forecasted economic growth in USA down to 1.7%. In the last meeting, prediction was growth for 2.1%. As well as that, their inflation forecast rose to 2.8%. Previous number was 2.5%. Now, obviously, when pushed on this, Powell had this to say: I do think with the arrival of tariff inflation, further progress may be delayed. What does he mean by that? He means delayed in reaching their 2% target. Because don't forget, inflation, the target for inflation for the Fed is 2%. So when pushed on this, he did say, I do think with the arrival of tariff inflation, further progress, as in to reduce inflation, will be delayed. When pressed again, if tariffs are going to be a driving factor about inflation rising in the United States, he had this to say. Some of it, the answer is clearly some of it. A good part of it is coming from tariffs. However, this is where I get to the bit about him giving the market a bit of a warm hug, and what the market really generally needed. He did say, that the US economy overall was still strong. And like I say, this did indeed give the market a slight boost, a much needed boost. And we'll have a look at the market in a little while, because let's face it, we've had several very, very stressful trading sessions if you're a bull. So, yeah. Anyway, I want to go on to the next part of this story of what happened last night. And as you know, the decision not to cut rates didn't please everybody, especially a particular individual. Okay. And that, of course, is Donald Trump. Now, it looks like he's going to try and start putting pressure on the Federal Reserve to cut rates. as this is what he had to say on his social truth, social truth platform, his version of X or Twitter, whatever you want to call it. This is what he had to say. The Fed would be much better off cutting rates as tariff starts to transition their way into the economy. Do the right thing. April 2nd is Liberation Day in America. Now, those of you who don't know what he means by Liberation Day and April the 2nd in America is this. Basically, in a nutshell, on April the 2nd, Trump will unveil reciprocal tariffs on many countries. You know, those countries, for example, who've retaliated to his tariffs, he's going to then retaliate to their tariffs. And then so on and so on and so on and so on. I guess it's going to be a bit like that. But he's going to do this on April the 2nd. And he's calling this day Liberation Day for America. Because don't forget, he has a big beef in his bonnet, or bee in his bonnet is the correct English expression. It's not beef, bee. That all the other countries are ripping off the United States when it comes to trade. He has a big, big thing about that. So this is why he's doing it. And plus he's a big, he's a firm believer of tariffs. So yeah, April 2nd, we're going to have these reciprocal tariffs on a day he calls Liberation Day. And like I say, this is why he's putting pressure on the Fed to cut rates. Now, another interesting fact, I'm not saying that he can do anything or anything like that, because the Fed has got to be, again, an independent body, like many agencies. However, there was a new executive order signed not last week, to give Trump's appointees more power over agencies like the Fed. So this is going to be quite an interesting development. I remember in his first term, Trump often fell out with Powell. He didn't, agree with what Powell or the Fed stance. So be interesting to see how this develops, how Trump versus Powell develops. Anyway, let's have a quick look at the market. Actually, like I say, he's had a bit of a hug. Powell at the moment. Start off with the S&P 500. Oh, let me get rid of this image first. That's the stage. Here we go. So S&P, as you can see, we've had a little bit of a Powell bump. Because like I say, he did state that the US economy is still quite strong, and currently trading around 5,697 points. If we look at it on a daily, obviously, it looks set to have another second day of gains. Bear in mind, we've had so many trading sessions of losses, 2 days of gains, and then a loss again. But now we look like we might indeed have a second day of gains. Same with the dollar index. NASDAQ as well. Looks like it could close another day with gains again. It's been boosted a little bit by obviously, what Powell said last night. Not massively. I mean, it's not a complete game changer, but it is up by 0.46%. If we have a look quickly at the Mag 7, Tesla, not massive, down slightly by 0.26%. Meta, getting up. Meta, a bit more of a boost. Don't forget, it's had a bad. It joined the other 7 Mag 7 of companies which have underperformed this year. Currently plus 4.9%. Microsoft 0.23%. Amazon 1.26%. Alphabet, slightly 0.7%. So again, the market's having a little bit more of a boost today. Same we can see with the Dow. Again, is up 0.42%. So again, like I say, it has given the market a teeny weeny bit of a boost, bit of a hug. There's quite a lot of things we need to keep an eye on, though. Okay, now something else I want to briefly talk about, and that is there is still No, like I said, we had a bit of a warm hug from Powell. There is still an awful lot of economic uncertainties mounting. Okay, and this is resulting in some ways, not all of it. And I'll talk to you and underline a bit more about this. Wall Street is looking to start cutting workers. Okay, now some of the major banks on Wall Street, Morgan Stanley, Goldman Sachs, and Bank of America, have begun workforce reductions. Now, before that sounds like, a terrifying headline, let me just underline a couple of points, okay? Yes, some of it is to do with economic uncertainties and what we're looking at in the future, how uncertain we are. But the other part of it is it's that time of year as well. Okay, so it's not all that dramatic, but that needs to be taken into account. There is that time of year as well where major banks, investment banks like these guys, start cutting underperforming staff. So though some of it is to do with uncertainty, some of it is not unusual for this time of year. This is where they do tend to cut underperforming staff as well. Like I know quite a few, I think it was one of the banks, Morgan Stanley, they've hired too many VPs apparently. They got ahead of themselves. So that's going to be interesting. That's a great question. Is America heading for a recession? That is a great question, Costas. Thank you so much for reaching out and saying hello as well. I really appreciate it. I really do. Now, first up, obviously, Powell said yesterday that though their economic output is slowing down, inflation is rising, but the economy is still pretty strong. Today, we had initial claims, which I'll talk about again in a minute, came in slightly higher than previous, but not massively higher, which goes to prove that the US job market is pretty stable and pretty firm at the moment. The expectation of going into recession at the moment, though it is scaring the market, it looks like we're going to slightly avoid it for the time being. Because what we're doing, what the market's trying to do is trying to guess what the effect of these tariffs are going to do. We all know tariffs aren't going to be good, but we don't know the absolute impact on them yet. Okay. I think the biggest fear, which we need to watch out for, is stagflation. That's when inflation is rising and economic growth is slowing down. That's the biggest danger. And like the Fed already said, okay, they predict US economic growth to go to 1.7 and inflation to pop up to 2.8. So they are indicating that we are bordering, stagflation is a real threat. Recession at the moment with the labor market holding steady, they should be able to avoid it. But again, we don't know exactly how this impact of the tariffs are going to be. We all know the tariffs aren't going to be good. A lot of people are saying they're not going to be beneficial for not just US, but the global market in general. But at the moment, we're still trying to ascertain, like the Fed said, the overall impact of that and will that lead to recession. So answer your question at the moment, it looks like with the labor market, we might potentially avoid it. But again, we'll have to see in future data. But what a great question. Awesome question. Yeah, so like I say, again, going on to my point with these central banks, some of it is to do with uncertainty, not necessarily leading to recession, but it is to do with uncertainty. But really, it's also that time of year where, they do cut underperforming staff. In other news, Bank of England, they surprised the market. No, they did not at all. I'm kidding. They did no surprises whatsoever. They kept rates unchanged, as we all anticipated, as we all expected. They said this in the statement. Sorry, excuse me. Since the MPC, don't forget those are the members who vote on the cut, obviously hike, cut, or remain the same. The people who vote, there's about 9 of them. They said, since the MPC's previous meeting, global trade policies is uncertain, and intensified. And the United States has made a range of tariff announcements to which some countries have reacted. So in other words, they're saying they're not doing anything because, like I say, again, like everybody else, everything is really uncertain, and we need to see how this pans out. So this is why they're not looking to cut rates. And finally, the other bit of data before we go and look at currencies and go back onto the market quickly. Like I already mentioned, US initial claims was announced at 223,000 versus the previous number of 221,000. Though it's slightly higher, it was below the expectation, which was 224. And like I said, again, it does show signs that the US labor market is quite steady at the moment, still quite firm and still quite strong. So that's a good sign, obviously, for that. For those who are new to trading, don't forget the US initial claims is the number of US citizens signing on for unemployment benefit for the first time from the previous week. So again, okay, that's it's not a shocking number. So it shows that the market is pretty stable. Let's have a quick look at what's going on in the market. Again, that was let's go and have a quick look at the currencies. Let's look at the British pound first. See how the British pound reacted on the back of that non-decisive Bank of England. As you can see, not really an awful lot of movement. Still trading around 129. I briefly tried to spike and touch the 130 level, but couldn't quite get there. But like I say, really we've got a bit of dollar strength on the back of Powell's giving the market a bit of a boost. The euro is the same. Again, it looks like it's going to end the session, lower. Again, this is down to the fact that we got a bit of dollar strength because of what Powell said. The only other one worth talking about, which I forgot to bring up and forgot to mention, she was the Euro Swiss. Okay, because Swiss National Bank had their interest rate decision today as well. And they did cut rates, but as anticipated, they cut rates from 0.5 down to 0.25, and it's given the euro a little bit of a boost against the Swiss franc. As you can see, this was the spike when the announcement was announced. So yeah, it's trading a lot higher. Today's currently trading 0.9583 on the back of what we weren't really surprised about, but this central bank actually did something and cut rates today. And finally, it wouldn't be one of my broadcasts if I didn't talk about gold, which of course I'm going to talk about gold. Gold is still remaining very much with the bulls in its favor, currently trading around $3,038 an ounce. In fact, it was, what was it? Was it yesterday? No, it was indeed today at some point, even though it's come down from that now, did hit another all-time high around $3,057, I think it was. All-time highs come back down there since then. But again, now we're looking really almost 4 days of new highs every day, and it's still firmly above that trend line. So even though Powell gave us some good news and gave us a hug, clearly the market's still very skeptical, very nervous, and looking at gold as a safe haven. Anywho, is there any other questions? Don't forget, this is a live show. Like I say, I had that great question from Costa, which was great. I really appreciate that. But if you have any other questions, you can always ask me anything. As well as that, you can share with me your opinions. Tell me what you think about the euro, about the market. Or just say hi, if you like. Don't forget you can do that. And also don't forget, if you're watching me on YouTube, you can always subscribe if you like. Hit the notification button, next time I go online. And if you're watching the recording, because quite a few viewers go and watch the recordings afterwards, after live shows, and you have a question, we have a point, you can put it in the comments below. I will see the comments, and I will reply next time I go live, which of course will be tomorrow as I go live every single day. Okay. And also don't forget, if you're watching me on Twitter, you can do the same. Okie dokie. If there is no more questions or nothing like that, not a problem. Not a problem. And like I always say, don't forget, if you're watching me on YouTube and you like this sort of thing, you put up with me, by all means, give me one of these. Subscribe if you like, hit the notification button so you know next time I'm going live. If you're watching me on Twitter and you put up with me and you enjoy this sort of thing, Give us, it's heart in it, I think. It's heart they do. Give us one of those. It's nice to know that you like what I do. Anyway, till tomorrow, because tomorrow's going to be a big day because we've got a quite exciting week ahead next week, which I'll talk about, and I'll be talking about that in tomorrow's broadcast. So make sure you don't forget that. Anyway, till next time. Don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.